A man walks along the streets on the Lower East Side of Manhattan, heading toward the intersection of Broad Street and Wall Street. Holding his hand and keeping pace is his 9-year-old grandson. Young Daniel Frischberg is about to get a first-hand look at the New York Stock Exchange. He doesn't realize it yet, but his destiny is to be a major player in the world of finance. What he's learned over nearly 50 years, he'll teach you today, and it's all free of charge. There's a billionaire locked inside you. The key to freedom is information, the kind of information you find here on the Money Man Report. Now, here's the Money Man. Here's Dan Frischberg.
Well, thank you very much, Sal Monastery, for that wonderful introduction, and I am so happy to be talking to you right from the beach, the most beautiful place in the world, the California beach. That's right. West Coast girls are hip, the whole thing. And here I am with the beautiful Alicia, and Shannon are running our show, and I couldn't be happier. Alicia is really paying attention to the show now, and it is really fun. And she's waving to you right now. We are not on Biz TV because we're in California today. Pretty soon, we're going to be on TV, on Biz TV, wherever we go. A little later in the show, Dr. John Rutledge will join us. He did absolutely beautifully sitting in for me on Friday. We still got a lot of things. There were things I wanted to call in because I got some questions I wanted to ask him. And so he and Dani Babb have been gracious enough, I think they're in California anyway, to stop by the studio here in California and be on the show with us, which is terrific. The Dow Jones Industrial Average was looking like it was very weak earlier in the day, and it just cannot stay down. There isn't enough selling to keep it down. And so it ended up fractionally up, but at least up. S&P 500 just about flat, fractionally down, and the NASDAQ down about 1/3%. Excuse me, I forgot how to work this thing. Now, that's what the markets did, but beneath the surface, really, there's not, I'm not seeing any real unusual moves. The Russell was also down 1%. That's the small companies. The S&P 100 were up just slightly. Obviously, we're favoring slightly big over small. The DAX was down 1.5% today. China was up 0.5%, Germany down 1.5%, and Latin America is not one place, but the Bovespa was up about 0.5%. Nikkei up 1%. You really have to start paying attention to what's going on around the world. It probably means, in the long run, more to you than what happens in the United States. There's almost a 3% drop in the price of natural gas today. Oil went up 1/4, which is about 0.4%, and it is now hovering just below 70. A huge drop in, silver down 3%, gold down 1%. All of those spreads I was talking about and we were speculating on earlier in the month, right now you're having this correction and they are widening again. Canada was just about flat. Its currency was up slightly. The yen was up slightly as well. 877-777-7713 is the number to call. And a lot of people want to know what was going on between me and Bob Pisani on the closing bell on Friday afternoon. I'm going to get Bob on in a few days, and we can get him to break free, and we'll talk about it a little further. It was really a strange interlude. I do want to answer some of the questions about this, but I'll 877-777-7713. And Howard, you're on the radio. Welcome.
A couple of things. By the way, you mentioned Bob Pisani. He's the guy from the Chicago pits, right?
No, Bob is from the New York Stock Exchange.
He's the guy. Okay.
Generally.
I was thinking of you today.
That's Rick Santelli you're talking about.
Right, exactly. By the way, the word on the street is Santelli was told by the head of NBC, shut your mouth criticizing Obama. if you like your job, that basically NBC is exercising, what is the term, control over the press.
Well, yeah. Let me put that into context for you a little bit. They have been getting attacked lately for having way too much criticism, not only of the president, but in general, what a non-economic person who doesn't know anything about what he's watching would perceive to be right-wing take. Actually, what's happening is these people are not right-wingers. In fact, Mark Haynes voted Democratic. These guys are not right-wingers, but they do like capitalism, and they do understand a little bit about economics. Nevertheless, the NBC, and not only CNBC, but NBC itself, has been threatened for what is supposed to be one-sided right-wing coverage. And so you'll notice that they have that rag, the Huffington Post, Ariana Huffington, they have her on regularly now. They have, what's his name, the former governor who was the head of the Democratic Party during the last election, who screamed. He was running for president, and he screamed and ruined his career. His name is dropped. Anyway, the bottom line is they are bowing to that pressure, and they are not being too one-sided. So I wouldn't doubt it, because you don't hear Rick Santelli doing that anymore. Carl's over there every Wednesday on the floor of the CME doing his hits from there as well. I might ask him to ask. I think he will be on Wednesday morning again over there in Chicago. But anyway, so let's go past that point. Move on.
One of the reasons I was thinking of you today when the Chinese suddenly exercised control over the internet. Mm-hmm. And to me, I remember you telling the story of in Russia where these guys showed up and they said the next day these two are going to throw you out of a window.
Yes.
I think this is the concern on dealing. Don't get me wrong. In this country, Obama is constantly, regularly violating the rule of law. We are heading to a Chavez-like government. Or some say even Trotsky.
Well, the thing about America is we do have the ability to heal these things. This is America. It is not Venezuela. We are not heading to a Chavez-type government. I think if the people on the far right had their will, were able to actually take control, that could happen. But there are a lot of balancing. This is America, and that isn't going to happen. And I'll tell you right now, what's keeping you safe are 13 capitalism-loving Democrats in the Senate who are not allowing these nutty things to pass the legislature. I'll be right back. This sounds like a very smart call, and I'll continue it if you still have anything you want to talk about on the other side of these messages. And then I do want to get to this strange interchange that I had on the closing bell with Bob Pisani on Friday, because there is meaning to it. And then John Rutledge will join us and take it even further, talking about China. Stay with us. All right, welcome back. The Money Man Report continues. Dr. John Rutledge has joined me in the studio here, and we have Dani Babb, who was on with him before. And if you, I'm trying to be comfortable. If you want to, we only have the two microphones, but if you have any time that you want to jump in, please do, and there's just grab his microphone or mine as you wish. Okay, smile and excitement. Okay, so and connected. Now that I have my guest and the caller is still on, feel free, caller, if you would like to jump in too. But John, here's the question that's been on my mind, and I for a while, because as you know, I want to get. I don't want in 2 years to be getting paid in dollars. And I can't get away from the taxes probably, but I feel that there's going to be a much crueler tax than that. It's not safe, in my opinion, to count on having all my assets in dollars. So, the place I believe the growth is going to be is probably going to be in China. So, let's see. You should be fine. Yeah, okay. So my question for you is, protecting property rights in China. This is what everybody, including me, is worried about, and that is I buy a factory from a company over there, which sounds like a good deal. It's a sale leaseback. They sell me their factory. They have the willingness and ability to pay. They give me a great discount on the factory, and then they pay me a nice income, and it all works out great. And then suddenly they decide they don't want to pay me anymore. It turns out they are the head of that company is the brother-in-law of the chairman of the Communist Party, and he just says, "I'm not paying you anymore." What then? Is that likely?
Gee, Dan, we got audio okay for me?
Do you have audio from John Rutledge? Okay, hold on a minute. Let's see what we got here. You should have audio. Not yet. Okay. You don't have it? Let me try another channel.
Hello? No.
Yes. Yeah.
Now
you're
you
on
hear
now.
him, okay.
Yes, you're good now.
Okay.
All right, we just changed channel. So we got him. Now, but
Dan, you want to know how you
the audience heard the question and
how you protect your property rights. I thought you were going to ask a question about China, because the question you asked sounds more like what's happening in Washington D.C. today than in China. When I was last time I was in China, I was in the back of a taxi cab on the way to the state council to brief the state council on economics, and there was a drive-time radio show, not too different than ours here.
Right.
And the announcer said that morning, Global Magazine had made a survey of all of its readers. The question was, is America becoming socialist just like us? And 65% of the readers said yes. And so first point to make is property rights are not really totally secure here either.
Right.
Because another person who knows a judge or has more money than you to pay the lawyers has a huge advantage over you in the courts. But back to China. China is the Wild West. The Wild West is always where the best returns are, and it's always where the most risk is. The place you can invest with no risk at all is in an old place that's not growing and has no returns to offer you either. That would be America today.
Right.
So in China, the way you protect yourself is, first of all, to diversify your investments across a number of different bets about people. Second of all, to make sure that before you actually give anyone any money, you have done thorough checks on him, not just on the internet, but through people you know who know him and his family and his colleagues for many, many years going back. The third thing you do is you make sure that the project you're doing is something that's in the interest of the governor of the province's career. Governor of a province is a starter job on the way to becoming a vice premier or maybe premier later on in Beijing. So these guys always report back to Beijing. And if you have, each province has a fund that is designed to help on employment and growth in the province, because that's what the governor's measured on when he gets his next promotion. So in my case, I would go to the governor of Zhejiang, which is the province just south of Shanghai. That's a place where a very, very dear friend of mine and I advised the governor. And I'd work with the vice governor and the governor, and I'd work with the mayor in the city where you're doing it to make sure that you are doing something that's going to help the growth of that province and help him get his next job. That said, at the end of the day, if you're the only guy in eyesight that has round eyes and everyone else is a local, you have risk. And so you have to just work very hard not to expose yourself too much in any one place to the risk.
So the answer, and are you seriously comparing the risk there to the risk here? Not really. You're speaking metaphorically.
Well, risk in China is much higher than it is in the U.S. because there's much more government intervention. And for example, in In the property market, you worry about mayors cheating you and local councils stealing property rights and things like that. But in the stock market in China, your biggest worry is that 85% probably of the stock of the company you're buying is still owned by the government as a state-owned company. And if they decide to belch some of that stock out into the market, they can drown you and drop the share price. And from time to time, they do that. When prices are going up too much, the government will dump some shares in the market. When prices are falling, the government will have those companies buy back. So it's very difficult to get a clean bet on a company. But you can mitigate all these things by actually going in there and getting to know the people and spend time with them and find out what they're trying to do and making sure that you're at least aiming in the same direction. But the returns are striking. The returns are very, very positive.
We're going to be right back. I've got some more questions about this. The whole idea of being able to to be able to count on growth in China to actually create growth, because I have a feeling we, after a little bit of recovery here for a little while, we're going to move up to a boring sideways trend line and be stuck there for years in the United States. If you want growth, you're probably going to have to go someplace where they're growing. And we'll talk about this when we come back. How do you do that? And is it a good idea? The Money Man Report continues. Well, the Money Man Report continues here, and this is directly aimed at Investor 2.0, who is quickly replacing Investor 1.0. And Investor 1.0 was a guy who was kind of sleepwalking and following his leaders, and just whatever people were doing at the golf course or on television is all he did. He had no reason to do anything new or think differently. He was just comfortable all the time and believed every book and everything. But he hasn't made any money in about 10 years, and so he is rapidly being replaced by the new species, Investor 2.0, who takes more responsibility for actually being awake, thinking about what he's doing, doesn't necessarily believe that there are analysts who have the answer for him, and that is exactly who this program is aimed at, Investor 2.0. My guest is Dr. John Rutledge. He spends a lot of time in China, where he is the president of a university and an advisor to some of the top people in the Chinese government, but he has been advising presidents and corporations and people in the United States for many, many years, and believes in capitalism. And so I guess my question is this. First of all, look, I'm sure I voted against having the policies that we are now watching happen. I voted against them. I know you voted against them. But look, there's going to be probably a period of time coming up right now where we come from we were dug such a hole, and when you pour $12 trillion into any place, people do start to buy stuff, and they still do start to do things. And so there is likely, in my view, to be an improvement in the economy here simply because there's so much money. We may stop at the bottom of a disgusting sideways trend line next year, but right now it should feel really, really good. So my first question is, do you think that's the way it's going to go? Number one, do you think that that we can have a good 6 months or a year here with stocks appreciating, no real sign of inflation yet, and actually make money in the U.S. stock market, albeit temporarily?
Well, before I make a bet on any asset price, I always make myself write down what is it I'm betting will happen or won't happen. In the case of the stock market, there are two things to be aware of. One is, what is the value of the companies you're buying, which means their ability to create cash flow, the interest rate at which you would present value that cash flow. So what are these companies really worth if you own them forever? And the second is whether the market is willing to pay you a fair price for that value today or not. The crisis of the last 2 years is really a crisis in which the bond investors lost their ability to understand the cash flows they would get from owning asset-backed securities, and they just pushed away from the table and said, we will not buy any bonds. That means that market has not been offering a price for an investor now for almost 2 years. that crisis is almost like an electricity blackout when the lights go out. So what do we know about blackouts? The lights always go back on. What do we know about markets? They always come back alive again. And right now, the bond market is beginning to come back alive. Spreads are down. The spreads of high-risk securities like junk bonds have narrowed against treasuries. So the bet to make now on the long side is that the prices got trashed so much last year when the markets were shut that you can make money as they snap back to fair value. Using that as the bet, this year my portfolios are up 20% over the market, and it's because I've had bets that are snapback bets, mainly bank stocks. The banks are open. The government is doing whatever it takes to make them profitable. The yield curve is steep. Banks are getting paid to own reserves. They're all being run by the Treasury, so there's really only one bank today. It's a monopoly bank. And they changed the accounting rules to allow them to reprice their securities. So there's all green lights for the banks today. So I own a bunch of Blackstone, which is the pristine bet on leverage.
I bought BlackRock a couple of weeks ago.
Well, BlackRock's the same kind of bet. Right. I own Bank of America. I own J.P. Morgan. I own Goldman Sachs as the class act in that game. Those stocks are up 60-some% so far year to date. The other thing going on is the government fix that got the banks back in business created a wall of money in the form of bank reserves, 900% up since last September. That is going to wash over all sorts of other markets as well. That means eventually there's an inflation problem. Initially, that wall of money is really just breaking through the illiquidity. As people begin to be more sensitive to that inflation risk, you have all sorts of commodity markets that light up. So in my portfolio right now, BHP Billiton is a bet on coal and on metals. FCX, which is Freeport-McMoRan, is a bet on copper prices and gold prices. STO is Statoil Hydro. It's a Norwegian oil, state-owned oil company.
Right.
All of those are bets on oil prices or commodity prices. The third thing going on is that Asia has really lit on fire now with growth again, driven by China. You can own China directly by owning their exchange-traded fund, FXI. You can own their feeders, which is Singapore, Taiwan, Hong Kong, Malaysia, Indonesia, all of which have ETFs. Or Korea. But those are all snapback bets. The problem you were alluding to earlier is that the government here is doing things now to undermine and weaken and destroy the long-term value of these companies.
Right.
And higher tax rates, more regulations, taxing them for their assets abroad, protectionism, all of those are ways of undermining cash flow. So I only feel comfortable with my bet on the stock market for the rest of this year. After that, I would like to have my assets elsewhere, or I'd like to have those equity assets hedged. Inflation is terrible for stock prices. It is not a hedge against inflation.
You know, I got in such trouble on CNBC Friday for saying this identical thing, but I made.
We remember the 1980s.
Well,
and 70s.
I do. Well, I'm thinking about Monaco,
right?
Because that's what it's going to. And I made the mistake of saying, well, I'm still going to want to live here because we got great restaurant. Oh my God, that was a tough one.
Yeah.
Anyway, well, I thought it was pretty cute, but they didn't like it.
Right.
Well, we're going to be right back. Are you able to stick around one more time?
Sure.
Okay, John Rutledge and me, Dan Frischberg, and this is the Money Man Report. We'll get off on time this time. Time for the news. We'll be right back.
Welcome back to the Money Man Report. And the Money Man has just taken a small sabbatical for about 15, 20 minutes. And this is Vince Rose sitting in for him out in Southern California today. We're actually coming to you remote from California. And in the last minute, is I have always known, is to be very pliable and, make things happen. So I went out here is why we were here, and one of the top traders that does it for a living, and he actually does it quite good job at trading is Rudy Novak. He's with Online Trading Academy. We don't always get access to him like we do Mike McMahon and some of the other talent that comes on our show in the morning and talk about trading. So we're going to take a huge departure here, and even though it's one of my favorite topics, which is China, and we're going to kind of go down into something that is a little bit shorter term, but let's talking about some of the things that are specific to people that actually do this for a living and the things that they look at and the things that are important to them. So Rudy is our top trader. Rudy, you've been trading for some time now, haven't you?
Yeah, finished Online Training Academy about 3 years from now.
3 years ago.
Correct.
And so you'd actually been a graduate here, and then you kind of found your way into making money in the markets.
Correct.
Was it easy?
Nothing easy, but as long as you stay focused and practice on everyday level and never give up what you do, and if you like something, you should really do it.
Right.
And as long as you practice on everyday basis with the tools that we provide in the classes, that we have live classes all over the world and in Texas too.
So what's your story? I mean, because your story is unique in the fact that not unless that's a Southern California accent, that you weren't born here, right?
Correct.
Right. So where were you born? How did you get here, and how did you get to trading? I mean, how did you know trading? I don't think you did, but I'll just let you tell your little story. That's important.
The story is I was born in Eastern Europe, and my parents moved me to New York, Brooklyn when I was a young kid, and now I end up in California. But trading is something I always wanted to do. I just never had a chance to really dive into it. And Online Training Academy gave me a chance 2.5 years ago when I really saw what's going on and how easy you can accomplish a skill and really take it to the next level in life.
Yeah.
And accomplish anything you really want as long as you practice on an everyday basis.
Yeah.
So for the last 2.5, 3 years, that's all I've been doing is trading for a living.
What was your hardest lesson? I mean, because you went from rags to riches in this business, meaning is that you started off with nothing, but then you started taking on more and more and more tools. And what was some of the things that you saw that were specific to you that made this thing hard, and then you realized that things were not as hard as what it should have been? There's always a path that we all go through, right?
Right. One of the hardest things in this business for me, it's my discipline. Because if I can really help these people that are listening to your show on an everyday basis to understand the most important thing in trading, it's only one word, is discipline. If you discipline enough and you put your ego aside and you stay humble in this business and you really focus where the market's going and go with the market, not against the market, that's the pattern for success, and that's the pattern to make money on an everyday basis in day trading or wherever you do.
Yeah, that's kind of interesting is that, with you, in your case, is that you have a skill set, and some of the things that you do, you use a professional platform now. You didn't start there, right?
Correct.
What you had to do is kind of find out that some of the different platforms and some of the different brokerage firms that you weren't going to make the kind of money you do today on those type of platforms, right?
No, the direct platform is definitely a huge difference from a regular platforms that we have on an everyday basis. But if you know how to trade, you can trade on any platform in any room of your house and make money. But to know a good platform, in this case like TradeStation, you really have ability to see a lot of more things clearly and execute the trade that going from you to directly to the market without the broker desk.
Now, do you use any of the big picture items? I mean, do you take in consideration global economic situations, the news, or you're down into an environment that doesn't necessarily care what all of those pieces to the puzzle are, correct?
I certainly look at them, but they are absolutely meaningless to me in that moment, because the real trading that we do right now in this particular market, which is a trader's market, it's momentum trading.
Right.
And in momentum, it's, as we all know, all this business is all about pivot points and support and resistances. So as long as I see clearly on my charts what I'm looking for, I just execute the trade. When you really see something in front of you that really you recognize that this is the pattern for you to get in, and the probability is the highest, you should probably press the button right away, because when you sit there and you wait, and that's how your probability shrinks.
Right.
So if you can make $1 hypothetically in a trade, by the time you get in, you're going to end up making 30 cents, if anything. Okay, so if you really see something that you like, you should really get in right away and fast.
Right.
And if you really want to be a trader, one of the things you really have to know is to make a decision fast. So if you really want to trade or be able to see how this skill works, I highly recommend you take the classes with Online Trading Academy, and you can practice on an everyday basis.
We know your agenda now, huh?
Yes.
Well, this is kind of interesting in the fact that we all tend to learn specific things about a word you just said. If you like the trade, when you say you like it, is there certain parameters that gives you that dislike or that like for that specific trade?
Well, I kind of find myself what I really like to do at this particular moment, probably for the next 5-10 years at least. Mm-hmm. And I don't really know another business that you can get up in the morning, and if you really know what you're doing, you can accomplish anything you want, and you can be absolutely free, mm-hmm. which is you have no boss, no traffic, nobody telling you what to do in life. Mm-hmm. You're absolutely independent,
right. And
you can spend an hour or two and make more money than my mother probably made in the last 2-3 years in 2-3 months.
Right, exactly. Now, Rudy Novak is one of our top traders here, one of our students or one of our ex-graduates, is my guest today here on the Money Man Report, and we're talking a little bit about the shorter term and some of the things that takes us down into a more compressed environment. And when you look at this and you look at the breadth of everything that's going on in the economy, which way do you like to see the market go, up or down?
I think the market is too overpriced right now, mm-hmm. and they're just going to try to hold the market until the Fed meeting in the next couple of weeks.
You say that's going to happen then?
Yes. My last thing, I really, it's meaningless where the market's going as long as you follow the market. But my last 3 predictions in here locally, and the traders know about it, mm-hmm. it was that I say the S&P will go to 920, 940, mm-hmm. and you're exactly there today. So my next thing is they're going to try to push it maybe a little higher. But by the time I'll see the SKF, let's say hypothetically, which is ultra short financial, which is around ETF, which is around $40 right now.
Right.
If I see that trades around $30,
right,
I'm in.
You're in long
SKF, short the market.
Short the market.
Correct.
Right. So you're seeing there's going to be a pullback, and that's where you're going to say it's at. Say it one more time. SKF hits what?
I think about $30, $28.
Okay, all right. And so then you're going to see a pullback.
It's going to be a huge one.
All right, Rudy Novak's my guest here today. I've got a couple other guests here we're going to try and work in once we get back, and we're going to be back here with the Money Round Reports. Right after this, you got a question, comment, concern, 877-777-7713. We'll be back right after this.